Hello and welcome to San Diego Market Watch, where we bring you accurate, timely information about the San Diego real estate market every single week. Today is December 15th, 2022. We are halfway through the last month of this year and well into the holiday season, and we are seeing a miniature real estate frenzy in December here in San Diego County. This is not the first time that this has happened, and it won't be the last. And it is definitely welcome in this particular year where we have had so much craziness and volatility in the real estate market. So what's going on out there? Let's take a look. As we discussed all summer long and well into the fall, the number of homes for sale was relatively unchanged for months. We were floating right around this 4,300 units on the market line. And then heading into November, it started to drop, and then it dropped some more, and it is just dropping like a rock. The number of homes on the market is now down below 3,500 again. And, if you recall back at the beginning of the year, this 3,500 line was one that we hadn't seen in a really long time. So when it crossed above it in the early part of the summer, it was interesting, and then it plateaued, and now we are way down here. And why is that? One of the reasons, I believe, is that sellers are not in a big hurry to dive into this market. Many people feel that recent price declines are somewhat transitory. That's a gamble, of course, and I don't believe that they really are. I think prices have settled to a point. I think we have at least hit a bottom and bounced off of it. Whether or not that bounce sustains itself and continues to go up or turns back the other way is yet to be seen. However, sellers are not in a big hurry to dive in and get involved in what's happening in the real estate market right now. And of course, you've got, holidays are another reason we're not seeing more new listings. But I will tell you in a minute why that's a little bit of a fallacy, of a misconception in the public in terms of people not putting their homes on the market during the holidays. Anyway, other reasons for declining and continually low inventory numbers. You've got sellers not anxious to get in. People have great rates on their homes and comfortable payments, and the list goes on and on. There aren't a lot of homes on the market to replace the one somebody is living in. So there's just a whole bunch of reasons why people aren't really putting homes on the market right now unless they have to, unless there's a job transfer, a death, a divorce. People aren't just selling homes because they want to cash in and buy something else, or cash in and move out of state, because things aren't that much better out of state right now. So, and it's wintertime in a lot of places out of state. So anyway, enough about homes for sale. Let's take a look at new listings, which again were very constant in the 500s for many, many months until we get to this, in between the first and second week of November, they start to fall off. And then by the time we get to Thanksgiving, they have plummeted to their lowest point in months, in years maybe, in terms of the number of new listings in 1 week. It was just over 200 the week of November 30th. And then look what happened when we came out of that Thanksgiving holiday. We had a real spike. It almost doubled. And, when you're talking about doubling from 200 to 400, that's not dramatic, but it is doubling nonetheless. And the same thing with pending sales. Pending sales dropped dramatically the week before and during the Thanksgiving week. And then rates came down a little bit during this time, and people came out of that Thanksgiving holiday in a buying mood. And pending sales increased again fairly dramatically, doubling in just 1 week, and then coming down again slightly here. However, I do believe we're going to see an increase in pending sales next week, and then probably things will go pretty quiet over Christmas week. But it is interesting to see how the holiday affects things. But the reason I say that the notion that people don't sell homes or don't put homes on the market during the holidays, it's just a misconception. I've always seen new listings in December and plenty of them. And right here, we have a doubling of new listings right after Thanksgiving. If people weren't putting homes on the market during the holidays, you would see this blue line remaining relatively flat or decreasing or slightly increasing. But in any event, we have a surge in activity here and a number of new closings, and closings are flat from last week to this week, but they are well above where they were Thanksgiving week. And of course, our highest week for closings in recent memory was here the week, looks like about, right before Thanksgiving, we had a bunch of closings. Anyway, that's what's happening with standing inventory, new listings, pending sales, and closings. And let's take a look at the reason for all of this commotion: interest rates. Look at that, folks. We are back down to 6.31% on average, according to Freddie Mac for the last week. And that is welcome news. This is, well below the high that we saw back here, at 7+%. We're back down to 6.31, and rates are relaxing even more as we head into next week. And all this is basically due to the bond market's reaction to the latest Federal Reserve Board action and, action with regard to the inflation numbers. Inflation numbers came in, while still high, they came in lower than expected and lower than the month before. So the Fed did what they were expected to do yesterday and raised the prime rate by another 0.5 point, or they call it 50 basis points. And, that has led the mortgage market to, relax a little bit. And many experts are predicting that we could be seeing rates in the high fives within the next 6 to 8 weeks. And that would be a welcome change to, what we had going on earlier this year when rates jumped up into the sevens, and that is absolutely unsustainable. You cannot have the median price that we have in San Diego County and have a healthy real estate market with rates in the sevens, regardless of inventory or anything else. If that were to persist, it would cause continued price declines. So we're looking more positive right now than we were. And now, especially now, if you can get a seller to cooperate with you as a buyer and help buy down the rate a bit, you don't need as much to buy the rate down into the 4s as you did a few weeks ago. And, if you're a seller, that's a good, solid compromise between dropping your price and not dropping your price. Giving a credit to the buyer to buy the rate down, either a 2-1 buy down, a 2-3-1 buy down, or permanent rate buy down. All of those are better options than lowering your price. Win for the buyer, win for the seller. So that's what's going on with rates. Now, if we look at median price, we can see, again, I had talked about this back here where we had a month-over-month rise, and people were saying, see, they're going up again. No, it was a blip. The trend had been established, median price coming down. We had a little bit of an uptick a couple of months ago, and now the last 2 months, this has come down yet again. So the median price in San Diego County is sitting, just I think it's about $765, $775 when you combine attached and detached housing. So, this number is not down as steeply as it was the month before. You can see it's starting to curve up just a fraction of a bit here. So this may begin to level out, or it may continue back down. Although I will say that what I'm seeing right now in the market on the ground is prices firming up, not going up, but firming up above what we saw a month or so ago as what seemed like a bottom for now. Median price doesn't exactly reflect what's happening on the ground all the time. This is a year-over-year number, et cetera, et cetera. So the one thing to note for sure is that median price is way up from where it was 3 years ago. So even though we've got a downward trend here, you can see back here on the chart several places where we had a bit of a downturn that then was followed by a steep upturn. And I don't believe we're going to see a steep upturn in median price next year, but I do believe if things continue on their current trajectory, things should level out and we should have fairly normal market, at least in the first and second quarter of 2023. We will see if I'm right or wrong, but I do believe that our median price is going to settle somewhere around 750 and remain in that range, in this 750 to, well, let's say the 725 to 775 range. I believe this is where it's going to be for at least the first 3 months of 2023. But we'll see if I'm right or wrong. So that's what's happening in San Diego real estate this week. If you like this show, if you like our content, in order to keep it going, please remember to like, share, subscribe, and comment, because that helps us out a great deal. We can grow our YouTube presence and get this information out to more people. And the more people we can get this information out to, the more I can get it out to you. So let's remember that and tune in tomorrow for our TGI It's Friday show. and excuse me, we'll be back again next week to do it all over again. So I hope you're having a happy holiday season so far. And we will talk to you again next week with another edition of San Diego Market Watch.